witnessing another round of sell-off today. It started off with the global collapse in silver's prices spilling sharply into the Indian markets. MCX silver slumped so much that we saw a 27,000 rupee drop in a single day as well. As far as MCX silver prices are concerned, gold dropped by about 2,500 rupees, and the repercussion is being seen on the ETF prices as well. Most of the silver ETFs are down anywhere between 13 to 15%. Gold ETFs are down 3 to 4%. Ajay ji, what is the key reason why we are seeing a fresh round of sell-off? We saw initial sell-off was again bought into yesterday and day before, but again today there's a sell-off. So investors are not able to understand what really is happening. What are they supposed to do? Buy the dip or stay away from this volatility?
Very good afternoon. And what a start we can say 2026. We have started 2026 with one of the finest gain we have ever seen for gold. In 1980, we have seen 30% gain in a single month. And 2026 is a period where we have seen around 28% gain. Similar case for silver also, we have seen 1st Jan to 28th Jan, we have seen 70% single month gain. Everything was going fine, but a parabolic move because the moment in a single day on COMEX on 26th of Jan, when Indian market was on holiday, around $18 gain and $18 fall. This is called a mania actually. This has already resembled in 1980, 2011. And that was the day from where we have seen volatility has increased. Margins across all the exchanges, it could be CME, LME, Shanghai, Indian MCX, margin has shoot up from let's say 20% to 65 in case of silver, and from normal 6-7% to around 26% in case of gold. And reason might be new Fed chairman, or dollar has recovered from 4 years low. Tension between US, Iran has slightly de-escalation. All these factors has made contribute this profit booking, and still we are counting that further more correction would be there as ETF sell-off is continued to be there. So slightly be cautious at this moment. We can see long-term fundamentals actually is going to be very positive, but still there is a scope of weakness from here.
So how much scope? So right now we actually slipped down to what, 2.41 lakh rupees per kilo for silver. That's what we slipped to after the maximum crash that we saw today. For gold also, we saw the prices inch down by 2,500 rupees per 10 grams. Where exactly is the level that you're looking at if this volatility and the downside is to continue? How much more downside?
So actually, commodity is a cyclic thing. When a rally start, it will continue to be there for 2.5 years, 3 years. But now cycle has totally turned down. Whatever the factors are maturing now. So we expect 2026 is going to be a negative year for gold and silver, first of all. From here, we still expect, things are not matured wholly, like central banks are continuously buying, or geopolitical tensions are still going on, but on the verge of completion. As of now, immediate support for silver is $70, which is around 2,10,000, 2,20,000 in case of domestic side. Whereas overall, we expect in 2026, we can see level like $54 on international, whereas on domestic side, it could be around 1,60,000, 1,70,000 band. Coming on gold, will be slightly support here. We'll get some support, like gold silver ratio is now improving, which means gold will immediately get a support at 4,400 level mark, which is 1,25,000 on domestic side. But overall, I think this year going to be a negative for gold and silver.
Very quickly, Ajay ji, if I have to ask you, because the appetite to buy gold and silver is still not away. Like you pointed out that central banks are buying. I'm talking about even the retail investors. They are only trying to find out if they have missed the rally, where can they still get an entry. They're still hoping that, yes, once again, we can see a 4 lakh level on silver. We can still see 1.8, 1.9 lakh rupees on gold also. So they are looking at a very keen eye that, you know, how much more downside so that I can just get an entry. So what are you telling those retail investors?
I think retailers should avoid as of now any entry. Go with the SIP so that in next 6 months, when things have been getting sorted out, you will get a better pricing, because already since last 3 years you have got very tremendous return. In fact, in last 1 year, silver has given 330% return. None of the asset class give this type of return. So this was just a time where we have to reduce our positioning. So I think if you are an investor, go with the SIP, which will give you a better return. And whenever this type of consolidation period comes, SIP is works better on value averaging.
Thank you so much, Ajay ji, for sharing all that view with us.